Happy New Year. If you're watching this, you probably have a headache. Not from champagne, but from checking your portfolio. Because we were promised something, weren't we? Remember late 2024? Everyone, the gurus, the Twitter threads, the laser eyes, they all told us the same story. They said 2025 was going to be the Supercycle. They said that with a pro-crypto president and institutional ETFs, Bitcoin wasn't just going to the moon, it was going to Mars. $200,000, maybe $500,000. But here we are, it's January 2026, and while Bitcoin is still fine, the rocket ship engine seems to have stalled. The buzz is gone. The retail investors, that's you and me, are confused. But while we were staring at the Bitcoin chart waiting for a miracle, the smart money, the guys in the $5,000 suits on Wall Street, were quietly leaving the party. They didn't sell their crypto to buy cash. They sold it to buy something real. They moved billions of dollars into a boring, unsexy, complicated sector that grew 50 times bigger while you were sleeping. It's called RWA, Real World Assets. And it is the only reason why 2026 might actually be the biggest year in financial history. Today, I'm going to explain why the banks are ditching digital gold for actual gold that lives on the internet. To understand why this is happening, we first have to admit something painful. For the last 10 years, crypto has basically been a giant, global casino. Don't get me wrong, casinos are fun. You walk in, you buy chips, and you hope you leave with more chips than you started with. But here is the problem with a casino. The chips are plastic. You can't eat them. You can't live in them. And if the casino owner decides to turn off the lights, the chips are worthless. In 2025, big investors, pension funds, insurance companies, the people who manage your grandma's retirement money, looked at the crypto casino and said, "This is too risky." They love the technology of the casino, the speed, the 24/7 trading. But they hated the chips. They wanted to play poker, but they didn't want to bet with dog coins. They wanted to bet with houses, with US dollars, with gold bars. They wanted the safety of a supermarket with the speed of a casino. And that is exactly what real-world assets are. It is the boring, stable stuff from the real world, real estate, US Treasury bonds, art, carbon credits, sucked into the computer and turned into tokens. And the reason this exploded in late 2025 isn't because Bitcoin failed. It's because the big boys finally figured out how to bring their own toys to the playground. Okay, let's pause. Tokenization of real-world assets. It sounds like a term invented by a lawyer to make you fall asleep. So, let's fix that. Let's talk about pizza. Meet Joe. Joe owns the best pizza shop in New York. The building is worth $1 million. Joe needs money to build a second oven. In the old world, Joe has to go to a bank. The bank is slow. They charge high fees. It takes months. But in the new world of RWAS, Joe can do something magic. He can tokenize his building. He takes the $1 million value of his building and creates 1 million digital tokens. Each token is worth exactly $1. If you buy one token, you legally own 1/1,000,000th of Joe's pizza shop. If Joe makes a profit selling pepperoni slices, he sends a tiny bit of that profit directly to your digital wallet. You don't need a lawyer. You don't need a bank. You just click buy. It takes heavy, expensive things, like buildings, and turns them into liquid, easy-to-move things, like emails. And in 2025, this stopped being a theory about pizza shops. It started happening to the biggest asset in the world, US government debt. Enter the final boss, BlackRock. If you don't know who they are, they essentially own everything. They manage $10 trillion. In 2024, their CEO, Larry Fink, said something that should have been a warning to every crypto gambler. He said,
"The next generation for markets is the tokenization of securities."
He wasn't joking. While everyone was distracted by meme coins, BlackRock launched a fund called BUIDL, spelled B-U-I-D-L. Here is what BUIDL does. It takes boring US Treasury bills, the safest investment on Earth, and puts them on the Ethereum blockchain. Before this, if a crypto company wanted to keep their money safe, they had to use stablecoins like USDT or USDC. Those coins pay 0% interest. You hold them, you get nothing. But BlackRock said,
Why hold a coin that does nothing? Hold our coin, and we will pay you interest directly into your wallet.
This changed everything. Suddenly, $2 billion flowed out of the crypto casino and into these real-world tokens. By December 2025, the market for these tokenized treasuries hit $7 billion. That's a 50 times increase in 2 years. This isn't speculation. This is migration. The money is moving from magic internet money to real money on the internet. So, what happens next? What does 2026 look like? We are entering the era of the everything token. Right now, it's just treasury bonds and some gold. But projects like Ondo Finance, Centrifuge, and Chainlink are building the highways for everything else. Imagine this. It's July 2026. You open your phone. You have $100. You don't want to buy Bitcoin because it's too volatile. So, with one click, you put $20 into a tokenized hotel in Paris, earning rent, $30 into tokenized gold for safety, and $50 into a tokenized copyright of a Taylor Swift song, earning royalties. Your wallet isn't just a bank account anymore. It's a global investment firm. And you are the CEO. This is the promise of RWA. It demolishes the walls that kept regular people out of the best investments. But, and there's always a but, it also means the Wild West days of crypto are over. When the banks arrive, they bring rules. They bring KYC. They bring taxes. The crypto rebel dream of anonymity is dying. The corporate crypto dream of efficiency is just being born. So, do you still have a headache? Maybe you should. The shift to real-world assets is boring. It's not going to give you a 10,000% return overnight like a meme coin. But unlike the meme coin, these assets aren't going to zero. 2026 isn't going to be the year of the moon. It's going to be the year of the Earth. And honestly, after the roller coaster of the last few years, maybe a little bit of Earth is exactly what we need. If you want to understand the companies building this new world, the ones that might actually make you rich without the heart attack, hit that subscribe button. We're going to draw them all, one by one. Thanks for watching.